why are interest rates so high in Nigeria? And, in discussing this, I want to talk about three most important factor. So, because if you want to understand the interest rates, you need to understand these key factors. So, inflation in Nigeria has been consistently high. I mean, due to a combination of rising import prices, currency devaluation as we know it, and the unstable exchange rate. So, and really, to control inflation, what do central banks do? They raise interest rates. And when they raise interest rate, which they call the MPR, what happens is that banks also raise the, interest rates on loans. So meaning that if you want to borrow money from the bank or any financial institution at all, you will have to pay that higher borrowing cost, which is the high interest rate. So let me first talk about inflation, which is the number one reason or number one cause of high interest rate in Nigeria. So the inflation is actually the major driver of high interest rate generally. So when inflation rates are high, what happens? Central banks around the world, including Nigeria, definitely they will want to raise interest rates. And why do they do that? They do that so that they can encourage you to save, so that as you are saving, it's also reducing the money you're spending. And that, in a way, controls inflation, because inflation is like too much money in circulation trying to buy fewer goods. So the textbook theory around reducing inflation is that they increase that rate so that you can spend less and the money in the circulation in the economy will reduce. So that is what central banks do, and they call it monetary policy tightening. And the expectation is that that will stabilize inflation. So the second factor that causes inflation is currency volatility and foreign reserve. Let me try to explain that. So Nigeria's currency, for instance, which is the naira, has been very volatile. We all know that. And why is that happening? It's because we depend so much on oil, export, and the fluctuating global oil prices definitely affect the currency. So when that happens, what happens? There will be shortage in the foreign reserves. So what happens again is that there will be pressure on interest rates as the central bank is trying to tighten the monetary policy. So generally, any economy where there is kind of currency volatility that will affect the foreign exchange reserves, you will definitely see inflation, as a result. The last point I want to make, which is another factor that is causing high interest rates in Nigeria, is the increasing government debt, right? So Nigeria's, public debt levels have been increasing, in the recent years. And what happens is that when government is trying to raise more debt, it means that the money available for private individuals to, get in terms of loan reduces. There is the pool of fund. If government is taking more of it, meaning that private individuals will not have access to that loan. So what do they do? So for them to encourage me and you to give our money to them so that they can borrow it, they need to entice us with higher interest rate. So as they are giving us higher, interest so that we can give them our money, what happens is also that anybody that wants to borrow money will also be paying the higher interest rate, whether it's government or individuals. So those are the key three reasons why interest rates in Nigeria is very high. So let's talk about the impact on either business or individuals. So again, we're talking about why is interest rates high and what impact does it have generally on the economy. So what does this mean for business? That's the question. So high interest rates definitely have effect on businesses across Nigeria. Especially the small scale businesses. So for many business owners, what happens is that high borrowing costs limits their ability to access credit for expansion. So if they want to buy inventory, they don't have access to more loans that they would like because it's very costly. If they want to hire more employees, it will also affect them because the employees that they can, employ reduces if they cannot expand. So we just want to talk about this. So if you look at generally what is happening in the economy, I mean, and you can see that in the news, is that higher interest rate is worsening business and it's affecting the SMEs more. And we have also talked about how it is also affecting the job creation. So when businesses cannot expand due to costly loan, what happens is that they cannot hire many employees. So this limits job opportunities for you. I mean, there are a lot of things in the news. We also saw like um, Nasima complaining about high interest rate and how that will affect, job creation. In fact, how that will even affect the economy generally. So let's talk about the impact. And we've talked about the impact, right? Which is it will affect job creation, expansion. If you look at, individuals right now, especially consumers in Nigeria, you will also see that high interest rate is really making life very difficult. So, in terms of the quality of life that people are living right now, it is very difficult. And why is that? So, if Nigerians want to build, they have to borrow money to build because the borrowing cost is high. That affects, how much they need to build. If they want to like spend on medicals, even if they want to like go to school, finance their education, the money they need now is high because they have to get it like through borrowing. So generally, I would say that in terms of the quality of life, the higher interest rate in the country is really affecting the average person, average consumer. And I mean, if the case study is also about like the housing, we've also seen in the news that cement prices are high and they're not going down. So I mean, there are no mortgages really in Nigeria, but if you think about it, that if you want to build a house, you have to like borrow money at 20 to 30%, which is very high. I mean, if you compare that to what happens in other countries where you can get mortgage at 3 to 5%, what happens is that disparity makes the financial burden on Nigeria very high. So let's talk about solution. I break down the strategies you can use to manage interest rate into I mean, let's talk about how businesses can really strategize and manage the interest rates and how individuals can also, try to manage the interest rates. For businesses, the first solution or the first strategies is refinancing of existing, loans. So you have to shop around. Some banks offer refinancing options to help businesses lower their interest rates slightly. So you can always move your money from a bank that is willing to give you a lower interest, from one that is currently having higher interest. So another refinancing option is that you can increase the tenor of the loan so that you have like a breather, you can be paying less, So what you're just trying to do is to make sure that you continue to run your business even in a very high interest rate environment. So the second strategy I want to talk about is, which is on the screen, is cash flow management. So this is the point where treasury management is so critical, right? So if you want to like improve inventory management, you need to like negotiate payment terms with suppliers. You need to reduce expenses that are not necessary. All what you're trying to do is to make sure that you do not have like heavy need for loan because it's very costly. So everything that can make you to have like cash flow that it really doesn't depend heavily on you borrowing all the time is a strategy that you want to look at. So the last one, which is I want to talk about, is like you need to, think about alternative financing options. So there are different ways to get money, right? So if you think that bank loans is too high for you, you can think about venture capital because those people believe in your business model. They think your business is going to like, grow, expand in future, so they can give you money. It's not like it's cheap, but at least you don't have to like pay high interest rates as it is today. You can also look at microfinance or microfinance banks trying to compete with the traditional banks. So what happens is they try to give lower interest rate than the traditional banks. I mean, just to also gain business. So what you're trying to do is that you're like, okay, the environment is very difficult, so I need to look at the other sources of funding for my business, and that's for businesses. So let's talk about the solution available for individuals, like the consumers like you and me. And this is the first one I want to talk about, which is like the budgeting. This is the period where budgeting becomes like very, very essential. And so at this point, you need to like budget every, naira that you're spending on everything, so that you don't rely on loan to go about your daily life. You have to minimize how much you have to rely on loan. And this means that if you need to cut down on things that you do not necessarily need at this point, then it's a very important thing. Another thing I want to talk about is you need to prioritize essential loans. And essential loans means that this is the point where if you need to buy, a house, or you need to like build a house because you are not sure of the, interest rate in future, and generally it tends to be higher. This is the time you want to like lock in like very essential things that are very important to your existence. Another thing, which is the last point I want to make, is flexible loan terms. And I always tell people that, it's not only banks that give loans to people, right? If you are a person working, you can think about cooperative society, probably in your company, where they give like lower than market, interest rates in terms of loan. You can think about the company loan as well. Some companies give generous loans. You can look at, some other microfinance banks that are also like trying to like attract people with loan, and they don't have to like ask for collateral and all of that. So generally, I'm just saying that, hey, if you want to go by in the high interest rate environment, you need strategies to continue to live your life without necessarily like getting trapped in this high interest environment. So that's about it. So again, understanding and managing high interest rates in Nigeria is crucial for both individuals and businesses. Why we may not be able to like change the rates directly, I mean, because we're not a central bank, we need to adopt effective financial strategies that can help us to minimize the impact. And that is what this video is all about. So thank you very much for watching. I know I give a lot of information, but you can rewatch it probably at a slower speed so that you can get the gist of the conversation. Again, just try to manage the high interest rate environment as much as possible, because again, you do not know how inflation is going to be in future. I'll see you again in my next video. Take care of yourself. Bye.